ICC TD18, celebrating 15 years of leadership.
Good morning to you, Chandra. A very happy new year. May 2015 be the year of better forecasts for TCS. You've had an interesting quarter, and I say interesting because some part of it was predictable. You always call it a seasonally slow quarter. But, you know, it's come on the back of a disappointing Q2, if I can be honest. And therefore, it's left me a little bit confused about what FY15 is going to pan out like. So I'm going to leave it up to you to characterize how this year is going to sort of evolve, given this last quarter that we are in right now. What are we going to end FY15 with? Definitely not growth that will beat FY14. That I know is clear at this point in time. Fair?
Fair, very fair. Happy New Year to you, Menaka.
Thank you.
I think from a Q3 perspective, it's usually a weak quarter, as you said, and I think we have delivered good set of numbers, given that we faced headwinds in terms of the working days as well as in terms of furloughs. But the biggest takeaway for me is that as we exit this quarter, we have seen a good momentum. I think the retail, financial services industry, life sciences, manufacturing, high-tech, as I highlighted in the call last night, all of these things are showing a very good momentum. We, at this point in time, see a couple of headwinds. One is the diligent business, because the books are running off. So we will have a revenue headwind in that business. The second one is the energy business. Because of the oil where it is today, it has actually gotten worse than when we started this quarter in Q3. So I think these are the two headwinds. But apart from that, I think we're pretty positive. And I can't give you a definite number for...
No, I'm not asking for a number. I'll tell you why I'm confused. So when we started the fiscal, you said this fiscal would be better than FY14, and that's what the outlook may have been, so I'm not holding it against you. In Q2, you admitted that you all had sort of dropped the ball somewhere, and I'll get to why, but you had admitted that you had dropped the ball somewhere, and growth, you know, sort of revenue missed you by about $20–25 million. In Q3, while the numbers are not encouraging at all, your outlook seems to be very upbeat. So is it that Q1 and Q2 didn't seem as certain with clients as you had anticipated, but that certainty has now been restored in Q3?
I think I would like to slightly differ with you, because Q3 the numbers are fine, just fine. See, if you look at Q3 this year versus the Q3 last year, we have done very well this year. Actually, if we had
volume growth is so low.
No, you should always look at. You should look at the constant currency.
But in Q3 last year, you did 1.8% in volume growth. Your peers have done 4% and more.
You should look at the volume and pricing together, because the contracts are all not time and material. There are fixed price contracts, monthly billing contracts, and time and material contracts. So we always said that you should look at volume and pricing together, and especially in quarters where you have a lesser number of working days, etc., you always have a better pricing. So if you look at,
if I may just briefly interrupt,
if you will allow me, if you had seen us deliver that extra 40 basis points, 30, 40, 50 basis points in Q2, then the momentum, the same result this quarter would have taken us exceptionally.
So I guess that Q2 is what failed you to some extent, or you failed Q2, however you want to put it.
Whatever it is.
But you know, this quarter is, look, when we started this quarter, we knew it was going to be seasonally weak. You did a mid-quarter review that talked down expectations. Your numbers have yet disappointed to some extent. Even the muted expectations have not necessarily been met. Dollar revenue is flat. If you take out equipment sales, you might in fact have had a contraction in dollar revenue and no growth whatsoever. Volume growth is not according to peer group numbers. So I'm just curious as to, yes, I know it's a seasonally quarter.
That's not a correct way to look at it. I think if you really look at the pricing and volume together, at 2.5, constant currency growth this quarter is a very good sort of number, and it is in line. It's actually meeting our expectation. The thing that we missed this year is Q2. If you had done that extra 40-50 bps growth in Q2, this would have been just fine to meet whatever we wanted to meet in FY15.
Okay. Before I go back to Q2, I want to come back to this sort of qualitative outlook, you know, for the rest of FY15 and of course more importantly FY16. Whatever didn't work out in Q2, is it now coming back in terms of action? Because you sound a lot more positive, you know, in your press conference yesterday, in the analyst call, than you did when we were speaking in Q2.
I think it's not that something didn't work out in Q2. I think if you really see the qualitative metrics for Q2, again, we grew in all markets, all industries, etc. But we did not meet the revenue expectations that even we ourselves had set for ourselves.
And there were three reasons you put down for that: retail, Diligenta, and LATAM, right?
Yeah,
Those were the three reasons I remember from the last quarter.
Correct.
Right?
And then now, if you look at that, retail is come back.
Not fully, it's flat.
No, not in this quarter.
Yeah.
Q3, we expected it to be slow in Q3 because there is season and holiday season, no discretionary.
But Q4 will be better.
I think it will be better from here.
So retail will, that problem will have been resolved. So
yes, will have been resolved.
Okay.
And the LATAM also, the problem.
Has
I think
the numbers show that in this quarter?
This quarter, and I think from here we will grow.
So Diligenta is the only sticky spot. You said in your analyst call that it might take a couple of more quarters to resolve that?
It may take even longer. See, I think from a Diligenta point of view, I also want to make sure that everyone understands. Diligenta is a different type of business. It's a good business, but it's a business which has one very large deal for a longish period of time, then the next large deal. So it's not a business where you get small incremental revenues every quarter. So whenever that large deal comes, then we get a very strong uptake in revenue. If that is not there, then it's kind of the policies run off, then the revenue keeps going down. So to that extent, Diligenta business, though it's a good business from a financial point of view, but from a quarterly growth point of view, it's a business which has quite a headwind for us. In the
when will you be able to resolve that, or when do you think it will stabilize? 2 or 3 quarters from now?
Can't say. When I have
thought in the analyst call you indicated that a couple of more quarters of weakness.
No. I said you should at least expect the next few more quarters of weakness. I did not say.
At least few more quarters. Okay, that's fair enough. Maybe I heard it slightly incorrectly, given that I was heard.
The way you are picking every word, it's very hard for me to use any word.
I want to ask you about the FY16 outlook, not in numbers, I know, because you don't offer guidance. But before I do that, a couple of other areas in this quarter's earnings. India growth potential. I thought you were expecting India to do better and better every quarter. It sort of flattened out this quarter. I'm just sort of curious as to what the outlook on India is, so it's a small part of your business. Consulting has done very well for you, but ADM has not. Explain to me why that shift has taken place. I
think from the India perspective, India has done well. See, when I say India will do better and better, it doesn't mean that it will grow 10% every quarter or anything. Constant currency basis, this has grown 3% plus this quarter. And when you convert it into dollar terms, obviously you're going to have a problem. But I think constant currency basis, India has grown 3%, which is not bad at all. All I expect India to do is to continuously grow, and we think that we will do that. So we are quite seeing the momentum, so we should see that. In terms of the service line, the reason ADM is flattish is also due to the number of working days and the furloughs, because most of the business that gets affected there is an ADM business.
So I was quite cheered by the growth in your consulting business, but you're saying I'm reading too much into it at this point?
I think consulting business...
Because that is a higher margin business for you.
It's a higher pricing business, not necessarily a higher margin business.
Okay, higher pricing.
Higher pricing, higher cost.
Yeah. Okay,
so margin-wise, I don't think it's a very high margin. But that's an indication of the discretionary execution business to come. When you get a high consulting business up front, then you know that there is going to be a follow-on work that you're going to pick up.
Okay, so now talk to me about 2016, right? This is the year when clients start planning their budgets, their spends. If you're telling me in your previous answer that consulting is an indication of improvement in discretionary spend, are you saying FY16 is going to be better than FY15?
This is Menaka's statement, not my statement.
I'm asking, it's not a statement.
As I said, I'm not going to make one-liners.
You regret having said this, is it?
Yes,
at the
I do.
beginning of FY2?
Yes,
I
I do.
heard the press conference.
Absolutely.
And you sounded
Yes, I do.
very regretful of having at all described FY15 to be
because
a
what
better
happens is that people are looking for a particular number. When you make a statement, they kind of catch on to that. So qualitatively, I would say that the deal pipeline is very strong. Apart from the two things I highlighted, everywhere else the momentum is good. Our recruitment is strong. Our pipeline that we have is strong, and we are executing very well. All the discussions we have had with clients clearly indicate that there is a good momentum. I always go by the feedback that we get on the ground. So I think we should do well in FY16.
No, but you've got to give me some context as to what well means. You're this big ship, you know, that has been moving at this incredible speed for the past many years. At some point, we've discussed this ad nauseum. Size will catch up with you. What do you mean by FY16 we will do well? I mean, I have no clue what well means in your dictionary. So please give me some more color to that.
I can't. Unfortunately, I can't.
No, I'll tell you why. No, please. Because,
we should be growing. See, we will be
in your press conference, you said we are poised for another exceptional year next year.
Yeah.
You've used some big words, right? You've said client additions are spectacular.
Yes.
Deal pipeline very strong. Customers are spending lots of money. TCS is poised for industry-leading growth.
I have not used...
so when you say spectacular, what do you mean?
I have not said customers are spending
lots of money. You said
these are your words.
You tell me we will do well. In the press conference, you say next year will be spectacular. Well and spectacular are two different words. So please tell me what FY16 will be.
We have said that FY16 will be a very, very good year for us. You can call it
exceptional. So now we've got from well to very, very good.
You can call it well, exceptional.
I think you called it spectacular.
See, all I am saying is that our North America market looks good. Europe looks good. UK barring Diligenta looks good. Latin America looks good. India looks good. BFS looks good. We have headwinds in insurance because of Diligenta. Retail looks good, and I've spelled out all the verticals.
At the beginning of FY15, you told me this.
What does it mean? The
last quarter of FY14 and the beginning of FY15, this is how you described FY15. That's why I'm asking you.
Still FY15 is a great year. We are going to deliver industry-leading growth.
Okay.
So you can always argue 0.5% less, 0.5% more, but still FY15, we are delivering industry-leading growth.
Thank you very much, and I hope we get some more detail and color on the next year when we meet you at the end of this quarter. Chandra, thank you for your time.
Thank you, Menaka.
Thank you.
CNBC TV 18, celebrating 15 years of leadership.